Okay, folks, welcome to an impromptu morning note. Hope everybody had an awesome weekend. If you joined us last night on Sunday Night Futures Live, thank you. And if you want to get notified of our future live streams, the next one is going to be on Thursday. Like, subscribe, hit that notification bell, and you will get notified. We also have a link below my 5-part video tutorial, my top 5 favorite candlestick patterns, and that's free. And you'll also get notified when we go live via email. All right, so let's get to it. New trading week, new trading month, new trading quarter. What does that mean? Volatility. Expect volatility. Now, hopefully the audio is good here. We're going to talk about a couple of things. Let me share my screen because we have Roaring Kitty back, and he just took a 6.6% position in Chewy. This was out last week. Rumor of him buying up, I think he put out a tweet or something like that, and rumor of Chewy circulated last week. And you saw it reflected in the price action. At current pre-market, we'll go to the chart in a minute. At current in the pre-market, you have Chewy up nearly $3. We were higher. So up 10.75%. Now, the first thing I look for here is ongoing concern issues. And while this used to be a high-flying stock, I mean, really, IBD, Investors Business Daily, top 50 stock, but it's fallen on hard times. It still appears to have revenue growth. Does it have profits? Yeah, it's got some profits. So no ongoing concern issues. Yeah, earnings growth 192%. So I don't know what kind of a low that's coming off of. Now, the other thing I want to look at is the short interest. Now, what I like to do is some back of the napkin math on short interest. I do not go by percentage of shares short, which at current is 17%. It doesn't really matter all that much. What matters are the number of shares short, and at this time, 19.91 million, nearly 20 million, relative to the 3-month average daily volume. That gives you your number of days to cover. So right now you have about 2 days to cover short positions on Chewy, and you could argue, looking at this chart here, a lot of them got they covered already, but there's going to be deniers out there, just like there were when the Wall Street bet community took on a position in GME, AMC, BlackBerry, Research in Motion, whatever you want to call it, and they denied. They leaned into that short squeeze, and they had their faces ripped off. So there's still going to be people out there that make that mistake again. I don't think your institutional guys are going to make that mistake. Not many of them anyway, because they got destroyed on that meme squeeze a number of years ago. So this is actually the wrong chart, but I looked at this earlier, CHWY. So you could see that we've been on a really good tear here, and we had a blow off top last week on the shares. My guess is on the rumor of this purchase. Can we move up higher? Sure. Is there a trade to be had here? Yeah, there is. I would not be a naked call seller. That you would have your face ripped off potentially. I don't care how far the money you can go. We've seen how far GameStop can go. You can see how far AMC could go. We do not want to be in that camp of being a naked call seller. So perhaps a put spread, perhaps a call spread. That's when you sell an out of the money call or a put, and then you buy insurance for a deeper out of the money put or a call, whatever you're trading, whichever direction you want to take. You can take both directions. But the benefit is that by putting on that cheap wing, you also get a insurance policy, and in addition, the reduction of your buying power reduction decreases because your brokerage says, okay, now we have a defined risk trade rather than undefined risk trade of selling naked options. So that's how I would play this right now. And I would let for the first hour of trade settle down. If we pull back, let's see where we pull back to. Make note of that. Then if we rally up, make note of that. If we pull back and take out either the lows or the highs of the session, in all probability, that's the direction the shares are going to take for the remainder of the day. So that's Chewy. Now, overnight, we mentioned this last night, that you had the European elections. Why does this matter to us? It matters because of the Forex market. What does that impact? Well, we like to trade commodities. We bought silver last night. I did that live. We're long of gold. We're long of the gold mining stocks. And a stronger euro usually means a weaker dollar. And we'll go over the futures in a moment. And right now, you have the Macron, his party, the socialists, just got wiped out, which is a good thing. News coming out today. Unlike most days where you get 8:30 a.m. reports Eastern Standard Time, you're going to get reports coming out at 9:45. That's the S&P final manufacturing PMI. It's a revision, so I wouldn't worry about that one too much. 10 a.m., more data coming out, construction spending and ISM manufacturing. So if you're a 0 DTE options trader and you're usually putting your trades on at the opening bell, you may want to wait at least to get overweight your normal position until 10 o'clock. Let's see how the markets react, so that way you don't get your face ripped off if you're selling iron condors or iron butterflies, etc. So that's what I'm going to do. I'm probably going to open up a 0 DTE trade, but I want to get this news out of the way first. Now, one thing I want to point out, and I went over this last night on Sunday Night Futures Live, was that the yield curve last week had steepened. It closed positive for the month, along with the S&P 500. It closed positive for the week, unlike the S&P 500. And at current 2 years, they're up about 0.6. 10-year is up about 0.10%. That is a steepening of the yield curve. So my bias going into this new trading week, while I believe there's going to be money coming in off of the sidelines, getting put back to work, I think we need to fade the rally. So that's the game plan going into this new trading week. We saw a big reversal bar on the Qs last week. We're seeing the yield curve steepen. We're seeing, let's bring up the futures. We're seeing ES, that's up about just shy of a 0.25 percentage point. This is really a weak rally. NQ up about a 0.25 percentage point. Let's bring that up here. So we have a weak, not a weak, it's an uptrend channel, but I think that this needs to get faded. Let's see what the 10-year is doing. Yeah, man. I mean, the 10-year yield, here's a weekly view. So this is a powerful move. We spoke about this last night. This is a problem. To think that these equities are going to shake off this potential breakout on the 10-year yield is wrong. Remember, the PE ratio is nearly 36 on the S&P 500. So I think that in all probability, we will be fading this market probably at or near the 10 a.m. hour once those economic reports are released. So that's the game plan moving into the new trading week. Now, looking at the futures action, we have Dow futures. They're at the top of the list, moving up nicely along with the NQ. Palladium breaking out. We own Palladium. We opened a position about 2 or 3 weeks ago. We're down at it at current fractionally, but this weekly chart, if we get a closing breakout by the end of business on Friday, I'll be looking for next week to get a retest of 988.50, and we'll be looking to open up or add to, I should say, our position. Let's drill down 15-minute view. Looking really, really solid here. We're going to hold on to that Palladium position. Russell 2000 continues to outperform the major averages. I think it's suspect, though. It's suspect because they're very sensitive to interest rates. And with interest rates on the rise, I worry about a rug pull on RUT. Gold doing well, coming off the highs. The dollar was able to mount a comeback this morning. Big comeback, in fact. We're still down, but this will spook commodity traders all day long. But see, we still have our silver position here. I may book profits there. ZL soybeans. Nice move up. Crude prices moving up. Not good for equities. Here's silver. This gap down last night when we bought it was down about at the lows 0.6% in the overnight session. And now we're positive. So nice trade there. Copper price, look at this, surging. Copper price is surging. Gasoline prices, unfortunately, moving up higher. Copper, again, copper, that's the micro. Home heating oil moving up. Lastly, Euro futures, they remain up, but they're off the highs of the session. I want to check in with the yen, and it'll give us a vibe for whether or not we have wow, this is really beaten up. At some point in time, we're going to need to buy the yen. New weekly lower lows. Let's take a look at some individual names. Tesla pre-market, last I looked, was up. Let's go 15-minute view. They tried to take it down here at the 7:15, 15-minute bar, bullish reversal bar. Now, we booked profits to the long side on Tesla on Friday. SMCI, of which we have a naked, not a naked put, a put spread position. And that is on a 30-minute view above its 21 period EMA. It closed there. It's doing a retest now. We may get a rally out of SMCI this morning. NVIDIA. We have a short position on NVIDIA. It's profitable, but I'll be watching the price action here for a potential exit on NVIDIA. I'm worried about some fresh buyers moving in here at the beginning of the new month and quarter. Natural gas. Natural gas down 2%. I was going to sell puts last night. Glad I didn't. But natural gas is looking interesting here. Here's the weekly view. Clear and defined downtrend. I think that this is safe, especially as we go into earnings season. I try not to do a lot of trades on stocks that are reporting earnings, whether it be common stock or option strategies, unless I have an edge which is rare, going into earnings. It's such a binary event. So what I like to do is during earnings season is look for more commodity plays. So that way I don't have to worry about the earnings reports. So this one here, we're well off the highs of the year. And I think that we can open up a very, very wide iron condor to the point where I would call it a synthetic strangle. What that is like an iron condor is basically, if you go by the textbook version, you're selling let's say a 20 delta put in the call same time, and then you're buying a 25 delta to hedge that position, or you can load up. You want to go 5 points wide, 10 points wide, whatever. But if you really want to get aggressive to create a synthetic strangle, you can, on the deltas, you can go 10, 15 points wide. Basically, you're buying very, very cheap, junky options. That way that your broker's seeing that you have a defined risk strategy on. The benefit is that with iron condors that are too tight, it drives me crazy because I want to see the time decay, but it's hard to get that time decay if your strikes are too tight, because you have your long call and your long put expiring pretty much at the same rate as your short call and short put, so you're not making much ground. And I like to be out of these trades about 21 days to expiration. Good luck if you're in a very tight iron condor. So I like to do more synthetic iron condors, or should say synthetic strangles, to help generate cash flow. Now, I want to go to Chewy for a moment and talk about that trade and what that might look like. Now, I probably wouldn't do a very wide synthetic strangle here because I would be afraid of getting my face ripped off. IV rank of 71%. Damn! These option premiums are not adjusted for the move this morning. Anticipated market maker move by July the 5th is a $3.62 move. I think that that's understated. Now, keep in mind that this is probably not marginable anymore. And if it is marginable, go into it expecting that your broker at some point in time is probably going to make it not marginable or raise the margin requirements dramatically because of all the speculation. So let's say we want to go out to a 20, let's say a 20 delta. That's 26 strike. That's only $1.24 away. They're expecting. I don't feel good with that price. $24.50 strike. That's an 11 delta. It's paying 14 cents. That's a very tight, very, very tight. Let's change this. It's not sexy. I don't like it. I don't like the trade. I don't want to sell wide calls here. I don't want to have my face ripped off. So I'm going to pass on this trade. What else do we have going on here? Let's just check back in with NQ again. This is the NASDAQ 100. Yeah, we broke trend here. It's only a 5-minute trend. Probably on a 15-minute view. Yeah, we broke 15-minute trend. So again, I think what they're going to do is they're probably going to fade this rally at some point in time today. Remember, yield curve rising, yields rising, dollar bouncing back. The only thing that's going to save this market right now, I shouldn't say market. The only thing that's going to save the triple Q names right now is the fact that you have a new month and quarter. So you're going to get money coming in out of the sidelines into equities. I think that's going to be short-lived. Don't forget about the 9:45 and the 10 a.m. reports coming out this morning. And we'll probably be putting on a 0 DTE options trading strategy, probably an iron butterfly. Folks, I will talk to you, or members, I talk to you throughout the day. Like, subscribe. You know the deal. I'll talk to you soon. Be well.